Hello friends, today we are going to see the books of account. As we have already studied, there are two types of books of account involved while recording the transactions. Okay, journal and ledger. We are going to see now in this video books of account. First books of account is a journal. The word journal has derived from the French word that is the jour, meaning daily records. Journal is the first book of systematic record of the financial transactions of the business. Journal is also called the books of original or prime entry, and it is recorded chronological. Chronological means date-wise record of the transactions. As we record first time the transactions in the journal, that's why it is called as first book. Also it is called as original or prime entry book. And this is a pro forma of journal. First column shows date, then particulars. In this particular, first of all we record the debit account, then we record the credit account, and below the credit account we write down the narration. Narration means short explanation about the transactions. LF means ledger folio, means page number, debit and credit. Okay, this is the pro forma of the journal. Journal. Now we are going to see what are the some important features of journal. The books in which the transactions is recorded first time is called a journal book or original entry book. The source document is required to record the transactions in a journal. Okay, source document means while recording the transactions in a journal, we require the documentary evidence. Okay, for that purpose, while recording the transactions in a journal, we require the source document. Also, we record the transactions chronological means date-wise record. Journal is a date-wise record. As and when transactions occur, we record in the journal. And the process of recording the transactions in a journal is known as journalizing. And date-wise complete record of the transactions along with the documentary evidence is available with the journal entries. Okay, this is all about the journal. Journal is called as first entry book or original entry book or prime entry book. Also, we record the chronologically all the transactions. Also, we require the source document for recording the transactions in a journal, and this is the pro forma of the journal. Date, particulars, ledger folio, debit and credit. Second books of account is a ledger. What is mean by ledger? Ledger is nothing but the groups of account. Ledger is nothing but the groups of account. Ledger is the chief book of account. The ledger is a book which contains various accounts to which the entry made in the journal is transferred. The ledger is called the books of final entry. This is the pro forma of ledger. Debit side, credit side. In debit side, date, particulars, JF means journal folio, amount. Then date, particulars, JF means journal folio and amount. See, listen carefully. We first of all prepare the journal. From that journal, we classify the accounts. For example, there is a cash account. Okay. Here I am going to prepare the cash account ledger. First step of recording the transactions in a journal, I have to identify the cash account in a journal. Cash account entry on the debit side, I have to identify such transactions, and that account credit entry I record on the debit side of the ledger. Okay, I'll repeat. First of all, we have to identify that account in the journal. Which account entry is on the debit side. That transactions credit account we record on the debit side of the ledger. Okay, likewise we record each and every transactions on debit side. Next step, we identify that account. For example, this is a cash account entry on the credit side of the journal. That transactions debit account we record on the credit side of the ledger. Okay, second step what? Second step we identify, for example, this is a cash account entry on the credit side we identify in that journal. That account debit account we record on the credit side of the ledger. Okay, clear? Likewise, we record each and every transactions. Then next step is we have to, after recording all the debit and credit accounts, we have to find out the totals, debit total and credit total. Okay, debit and credit side accounts are total separately, and find out the difference between the both the sides. Okay, listen carefully. The difference, if the debit side of the balance is more than the credit side, if debit side of the amount is more than the credit side, that amount we call it as a debit balance. And we enter that balance on the credit side to close the account and return as buy balance CD. Okay. And if the credit side balance is more than the debit side balance, then we call it as a credit balance, and that balance we enter on the debit side to close the account and return as to balance carry down. Okay, now bringing down the balance for the next period or month on the opposite side of that account, and with the word to balance brought down or by balance brought down, as the case may be. Okay, this is all about the ledger. Ledger is nothing but the groups of account we record. Ledger is also called as book of final entry. This ledger provides the complete information about all the accounts in one book. Also, we can calculate what is the main item of the revenue, what are the main item of the expenditures. Also, we can easily identify what are our assets, what are our liabilities with the help of ledger. Okay, this is all about the ledger. Now we are going to see what is the difference between the ledger and journal. See, journal, nature of book is prime entry, because as and when transaction occur, we record in the journal. That's why it is called as prime entry, journal. And ledger is a secondary entry, because we transfer journal entry into the ledger. That's why it is called as secondary entry. Basis for preparation, we require the source document for mentioning that transactions in a journal. And from that journal, we record the transactions in a ledger. Okay, that's why there is no any source document requirement for making the entry in the ledger. Stage of recording, this journal entry is the first stage, ledger posting is the second stage. Main objective of journal entry is to record all the transactions in a chronological order, means date-wise record. Ledger, to know the net effect of various transactions affecting a particular account. For example, cash account, capital account, salary account. We can easily find out what is the effect of that account. Balancing. In journal, no balancing is required, but we find out the total of debit and credit, and it should be always equal. Ledger, we have to balance, as I have already explained in previous slide. Narration. Narration means short explanation about the transactions. That is, we have to mention in the journal. In journal, we first of all write down the debit account, then credit account, and then we have to write down the narration. Means short explanation about the transaction. In ledger, no narration is given. Journal, name of the process of recording the entry in journal we known as generalizing, and process of recording or classifying the accounts in a ledger is known as ledger posting. Basis for preparation of final accounts is no serve as a basis for preparation of final accounts, because we are not preparing the final accounts from the journal entry. But ledger serve the basis for preparation of final accounts, because from that ledger balancing figure we prepare the trial balance, and from trial balance we prepare the final account, that is trading account, profit and loss account, and balance sheet. Okay, this is all about the books of account. Remember, there are two books of account, that is journal and ledger. Journal is a prime entry book. As and when transactions occur, we record that transactions in a journal. Okay, and we record chronologically in the journal. Ledger, in ledger we classify the accounts. Means ledger is nothing but the groups of account. In that ledger we prepare the cash account, salary account, machinery account, Suresh account. Likewise, we classify the accounts and try to find out what is the effect of that transactions on particular accounts. Okay, Thank you.